Thanks again for coming to today's training. My name is Peter Chega, and this is the IB Access Africa for those who are new in this presentation. This is the third day we are doing training on NSE. We usually do NSE share trading training on Wednesdays. Then for international stocks trading, we do on Friday. So for the other previous two videos, I've already posted them on our WhatsApp channel. Let me share that link. So that's where I'm posting all the videos and also additional blog posts. When you're getting into NSE, especially a beginner, you need to know whether you want to trade on short term or you are trading in long term. You hear these terms from our research. When they are doing recommendation, they tell you this is for long term investment. What do they mean when they say long term? When we say short term trading, what do we mean? Short term is where you buy low and sell high. So you find you are doing frequent trades and you are making something called capital gains. So you are buying today, you watch the market, it goes up, you sell. You come again and check NSE indexes, how they are performing, which stocks are low. You buy, then you sell when high. You're not looking at dividend. Because if you're looking at earning from dividend, it means if you get dividend today, you will wait until next year to get another dividend. However, in dividend, there could also be an element of short-term trading where you are buying a stock to get a dividend. Once you receive that dividend, the following day, very early in the morning, that is ex-dividend date, before prices fluctuate, you come and sell. You have already taken your dividend, buy another counter that has cleared dividend maybe the next month. So your work is to revolve around dividend, but you are trading frequently. So the difference between now short term and long term is the frequency of trades. If you are doing so many trades, buys and sells, then you are short-term trader. And you need to check whether you are making money when you sell. So this one requires timing, because again, you may buy when it is high, then you sell when it is low. You have made capital losses, you have lost. So it requires timing. You check a stock. What is the price? Is it going down or up? If there are signals it will go up, then you hit in with the price you buy. Then when it goes up, you exit. It also requires a lot of analysis that is done mostly by research, but they don't do for short-term trading, because then you as the client, you need also to check the performance of that stock. So it requires you do a lot of research on a stock and also making fast decisions. When the price moves up, don't even hesitate to sell. You sell when you have made gains. But what if you sell and that counter continues moving up? See, again, you have lost some margin in profit. That's why in short-term trading, it's for high-risk takers. That you're willing to take a small profit. Even if the counter goes up, you will not regret selling. Now we come to long-term investing. This is where you hold good companies for years. Good company means you are checking NSE indexes, how they are performing. And you are interested in counters that are performing well, and also they are giving dividends and other corporate actions like bonuses. Remember, bonus is a dividend in form of shares. There is dividend in form of cash, the one you receive. There is dividend in form of bonus, where a company decides, instead of giving you a profit share, let us give you additional shares. Then the profit that we are supposed to give you in cash, we reinvest for growth. So for long-term investments, you are focusing on growth. That is, you are buying shares, and these shares appreciate in price over time. You're not looking in a duration of time that you have shot up. No, you're saying I'll buy, like say KPLC now. Maybe I can sell later when it reaches 50, which you know it won't right now. But are there instances where that can happen? I'll take you back to Safaricom. IPO 5 bob, hits the market 10, 20, slows down all the way to 2 bob. Then stays at 2 bob. Right now, at what price is it trading? Also, you are focusing on dividends. as a long-term investor. You are buying stocks that are giving you dividend. Then when that dividend when it comes, you don't use it for other expenses. You return and buy the next dividend. When you receive the next dividend, again, don't use that money, buy the next dividend. That is, you're looking at book closure. I will come to how you can do that in Excel, and I'll also prepare that spreadsheet and share with you so that you're able to track dividends for long-term growth. Remember, you get a dividend from Safaricom, don't use it. KPLC, maybe they have announced a dividend next month, is the book closure, buy it. When they do book closure, remember this payment date, you receive dividend from KPLC. Don't use it unless it is pressing need. Return it. Maybe Equity have announced a dividend after that. When it comes, then you go with that cycle. It's called dividend recycling. We'll see it. Where you are using a dividend to buy another dividend. You find at one point, you don't even need to go back to your pocket to buy shares. We are using these dividends now to reinvest. And now you channel your extra cash to other investments. Then long-term investors, they also look at compounding. So let's go to the next slide. You are new, you want to buy. What do you need to check before you say I want to buy this share? So remember, before you invest your money in any company, do a little homework first. Just think of buying share like the way you buy RAD. You need to know where this RAD is. Is it good for farming? Is it good for residential? Is it good for commercial? So you look at the soil quality. Then you check the documents. What does the title say? Is it the same person who is selling to you? Is the idea of that person the person you are talking to? Is this person a deceased? Maybe there is a court case. They are following up on succession. What are the future plans for that area? You can buy maybe in desert, and you are stuck with that RAD. Now bring that into NSE. You buy a stock and you're stuck with it forever. What happens? You are not able to sell because it's not trading, it's not giving dividend. But if you do a little homework before you put your money in, then you know I'm getting into this RAD knowing what I'm getting. There are stocks which you get into the market and you look at the news, you find they're always fighting. Like, let's go back to Mumias. The fight started a long time. This person wants to take over, then people from Mumias, we don't want. Again, we don't want to deliver sugarcane to Mumias factory, we want to deliver to this. All those issues, what did they do? Brought Mumias down. Government came in, politics. Every person who wants to start there as a politician, they bring in politics in Mumias. Eventually it desisted. Those who had shares, they were stuck with them until now, that point where CMA will come and say enough is enough. Either we need to reimburse money or you need to come back to the market irrespective of the price you traded. But remember, it has gone way below. I don't want to quote the price. What if as an investor you had done an array analysis and you realize these in fighting, they don't look healthy. Even if I'm making losses, let me sell and buy a dividend counter then. So these are some of the things we will come. In the next slide, we'll see the red flags you need to check. So let's first go through a terminology that is used a lot in our research reports called company fundamentals. As we said, these are trainings. I'm trying to make this terminology simple for you so that when you're reading our research reports that are done now by the research team, you're able to interpret those reports. So company fundamentals, you are checking the company basic health. It's like checking a medical checkup before marriage. Sorry for using that example. But you're doing a medical check before marriage, so you know where you're getting into. Either a healthy marriage, you're getting into a healthy marriage, or you know what will happen. And you can see that icon. So you are checking this company. Will it be my good the next, the next half? Because remember, it is money you're putting in that company. It is like your third half. Remember, you already have a second half in marriage. Now you have another investment that is like your own, another marriage you are putting in. You are looking for basic health of a company. You don't want to put your investment in a company that will crash in the next 1 year. What happens? Maybe you'll be rocked, or they go with your money. But remember, CMA is always there. So look at one, profits. Are they making money each year? If it is losses, that is a red flag. You only need to check price movement and use that stock as a speculation, where you are buying low price, but you are not using it for long term. Because if a company keeps on making losses, what stops it from shutting the doors? You also check revenue. Their sales growing or dropping? And all these you can get from company-specific financial statements. You can always tell whether their sales are growing or not. If they are dropping, then that tells you there is something that is wrong with that company. Debts, are they owing too much, or are they managing their loans well? Because then debt tells you something. This money you are putting in, remember, there's somebody who through IPO put in money maybe to support that company. It starts from IPO when they list. Somebody gives their money. Let's say you as an investor, you want to buy a company at IPO. You have given them money maybe to expand. When this X wants to get out of that shareholding, they sell to somebody else. Remember, the company cannot reimburse you money. It's already used. That's why they use the NSE. So that if I want to buy shares, you sell to me, you cede your shareholding to me, then me, I give you money. So you get out of the shareholding. Remember, there is a money that is still stuck with that company. If they're owing too much, remember at one point, they will not be able to run that company. As you know, even personal loans, when you take personal loans, there's a point they overwhelm you and you don't know how to pay them. What do? At some point, you switch off. However, if they are managing loans well, so such that they are making, they're investing those loans in assets or services that are giving revenue, then that's a company that has a future. So you need to check some of these things. Profit, revenue, debts, among other, even corporate governance. How are the board at the top? How are the management? Are they fighting? If they are fighting, another red flag. If they are always happy, then no, this is a company. Let's take an example of Safaricom. It's Safaricom because of data in M-Pesa, and mostly they are supported by M-Pesa. They have high revenues. Who is not using M-Pesa these days? Even banks now, they are trying to copy M-Pesa. Everybody actually is trying to copy M-Pesa. There's an innovation on their side. What they are doing, you want to do. Because we have realized now everybody knows M-Pesa than the bank. Just tell me the last time you went into a bank, even ATM to withdraw. Now banks realized people have moved to M-Pesa. That's why they introduced card payments and also agents within our estates. Trying to compete with who? M-Pesa. Trying to target this revenue that M-Pesa is getting. They went ahead and even implemented M-Pesa in the platform. So with that can tell you Safaricom, through M-Pesa, they have high revenues, which is growing their profits. Safaricom, I think they have low debts, and that means strong fundamentals. Their basic health is strong in simple terms. Let me not use fundamentals. We use what we saw there. So if you're checking company basic health for Safaricom, you are using revenue, profits, and debts, then they have strong fundamentals. All these you get in our research reports when you read through them. Look at KQ. I don't want to use KPLC because KPLC initially it was in debt. I don't know what happened. Then things changed, but again, politics. Sometimes politics, they play a lot. KQ, again, there are also politics in, but they have high debts. Their profits are unpredictable. There are times they tell you, they have profit warning. Only to go there, you realize it is a loss, and which affects your performance. So this, you look at it mostly, and this is an example. I'm not saying exactly it is risky. If you do more analysis, you may realize this falls under the category of where you are using it to speculate. Speculation. That's why I've spelled that word, speculate. Where you are buying low, sell high. You don't want to hold it for long term, and you don't know what will happen. But can KQ go down? Unless our airports close, or somebody comes and takes over, or another company comes and brings in their own airplanes and they rule the world, where KQ is ruling right now. And that happened. I'll take you to story of Mumias. Mumias, I think, some time back, they are the ones who are ruling Western. What happened? Other sugar company came in. You know all of them, and they took over the industry. So anything can happen. Even Safaricom, it's not that they have that monopoly. Over time, you find somebody innovating and put them out of the market. So you need always to check some of these. Most of them, profit, revenue, and debts, among other factors. So again, before you buy shares, remember this is you're looking at a company. The next thing is corporate actions. These are major company decisions that directly affect you as a shareholder. Anything you see on that corporate action, you see that spreadsheet from NSE. Below now, NSE share index, there is corporate actions. That's where dividend bonuses that issue are posted by NSE. Those, they affect you directly. Why? If a company declares a dividend, that is company profit they are sharing with you. How does it impact you as a shareholder? You are getting additional revenue from your investment. Remember, for a dividend, you have not sold shares. It's company paying you an extra amount out of your investment. Your shares still remain in CDSC. There is bonus shares. As we said, instead of company paying you cash dividend, they can decide to add you more shares and use this amount they would have paid you to reinvest it, maybe in another innovation, and grow their performance. So bonus shares are extra free shares for being a shareholder. It will be announced in corporate actions. We'll go this now again in details next week when we are doing our DigiTrader. Then there is rights issue. As a shareholder of a company, you are offered more shares at a discount. But remember, you have to pay for them at a discount than the way you would have bought in the market. You have 3 decisions to make when rights issue are announced. Either you take your rights or denounce, or you just sit there and decide I will not do anything. What happens? If you take up the rights, you are taking more shares at discount. Instead of buying shares directly in the market, you can buy rights at a lower price. Then when they list, remember they are added to your shareholding. You not have like KPLC rights and KPLC shares. No. When these rights start trading in the market, they are converted to shares. So you bought extra shares at a discount. Or you can decide, let me sell them in the market, I don't need them. Then somebody else can buy at a discount and pay for them again at a discount. It happens. Or you decide I will not take, you lose them. Mostly these companies, maybe they want to raise additional capital. Remember, they already listed at NSE. They can't list again. That's why they issue rights issue. Again, a company is already listed through IPO. It can't re-list again. They already listed. How can they offer more shares? But through rights issue, where they are saying, you existing shareholders, come and take these additional shares. If you don't want them, then those people would have come in through the IPO. If it was allowed at NSE, just sell to them, because we can't do another IPO. They pay that fee, then they are onboarded as new shareholders. So that's what rights issues are. So for a dividend, think of it like getting a rent from a plot you own. You have bought a plot. That plot is there. You lease it to somebody who is paying you that rent. You have not sold your plot, it is there, but there is extra amount you are receiving. That's what dividend is. The company makes profit. Instead of you selling shares, they're giving you a share of that profit. Bonus shares, it's like you own a plot. Then the person who sold you the plot says, since you have been a good friend, and I can't sell these my remaining plots there, so I give you this as a token of appreciation. So they are giving you an extra plot for free, which you don't pay for. I hope that analogy makes sense. So we go to the next one. If you have any question, please put on the chat. Then what do you check before you buying shares? Again, check recent news and updates. It's very important. Whatever you see on news, business news, is very important. I've seen, especially in let's say a crazy example, in hotels and clubs, when the main news are over, they switch from news to music. They don't let you see business news. In your house, never let those business news pass you, because these were performance of these companies. You get the news of what is happening. You get a real picture before you find it next day, either in Business Daily or in our reports. Then where do you get these news? One of them is NSE and CMA website. Anything you see there, remember, it is a nod from the regulator. It is confirmed as the right news. Then our reports, whatever is on NSE and CMA website, you find it in our research reports with a commentary. That's the beautiful nature of our reports. There is an additional commentary now telling you what is happening. Then you have Business Daily, Standard, Nation. Whatever you see there, never flip that newspaper. And you have seen Mumias, maybe something is happening, and you flip. No, read. Because they could be saying Mumias is coming back. Remember, they will come with a bang. So that's the time to position and buy. If they say maybe Mumias, or let's take another example. Company X, they have been taken to court. We saw it with East Africa Cables. That tells you something is wrong. What if they lose that case? Those are the questions you start asking yourself. What if they win? What did the court say in the first day? If you see red flags, exit before they are suspended. But again, they are already suspended. There is nothing we can do now. It's just to follow up what will happen between East Africa Cables and Equity. The direction that court case goes, CMA will give an update on share trading. If it is delisting, you'll be told what to do. If it is suspension, you don't worry. At one point, you'll be able to get out. If they are coming back, maybe it will be the right time to buy. I think there is some money they are fighting over. If they are given that money, they might give a dividend. So these are the news you need to look at. Then also Google News and Twitter finance pages. But remember, these are not certified news. That's why you need to cross-check with other reports. So as a tip, if a company is always in court or they always on audit, a red flag. If you own shares, you only need to think twice. Do I offset and offload these shares and buy another dividend? Yes, I will go at a rose, maybe a small rose, and buy a dividend that you come and compensate these rows. Then next year it will give me another dividend. Now that gives me profit. Or do I need to wait? And whatever goes. It is the decision you as a client you need to make. And that you can always get from these sources, especially from our reports, because they give commentaries. Again, when you're buying, remember to focus on sectors that are growing. You don't want to buy stocks on a sector, let's say manufacturing, and that maybe it's being affected by politics currently. This is just an example. I'm not saying that's what is happening. And maybe telecom sector is being supported by government and even other investors where there is growth. So you need to check these sectors. And there are some hot sectors in Kenya that you can check. Remember, the price list from NSE is actually segmented in sectors. So you need to check at the telecom. Maybe you take Safaricom. Banking, there is Equity, KCB Corp. They give dividends. And most of these, I don't think I've seen any politics playing a lot. KCB, I think the major shareholder I've seen is government. The rest, I'm not sure the shareholding of those companies, but you can always check recommendations. Then manufacturing, we have EABL, BAT, and Baburi. Most of these, they give good dividend, but their prices, remember, they are high. But nothing stops you from buying one share with that small amount. If it is trading at 140, you put 200 to factor cost. You buy one share, next time 200. You build up your portfolio to million. So we'll come to that slide. We are yet to go there. Energy, we have KenGen and KPOC. These are like brothers and sisters. You affect KPOC, it affects KenGen. You affect KenGen, it affects KPOC. Why? KPOC, they buy power from KenGen. So KPOC, they peg their performance on KenGen. And you see those counters performing in a similar trade. KPOC goes down, KenGen goes down. Because whatever is affecting KPOC is directly affecting KenGen. Remember, KPOC, they pay KenGen. It's not the other way at KenGen pays KPOC. And you find maybe whatever affects KenGen doesn't affect KPOC a lot. But remember, KPOC is also buying power from who? KenGen. It's like the way Safaricom, they were saying they split with M-Pesa. If M-Pesa was to come and list, remember Safaricom is also tied to M-Pesa. Whatever happens from Safaricom affects M-Pesa. Whatever affects M-Pesa affects Safaricom. That's just an analogy so that you understand why KPOC and KenGen are brother and sister. I don't know which is brother and which is sister. Maybe that is a discussion for another day. But that's how they work. Analogy, think of a sector, it's like a farm where some produce more in certain season. Think of this like you own a farm in Makueni, another one in Murang'a, another one in Nyeri, and another one in Western, and another one in Kisumu. Remember, what you're growing in all those farms are different. In Makueni, you are doing fruits because maybe of weather. In Murang'a, you are doing mangoes and coffee and maybe in some areas tea. If you go to Western, they have sugar. I think when you go to Kericho, that is tea. When you go to Kisumu, maybe mostly is just general farming and fishing. So you want to check seasons so that if you are buying land, you are making decision. Do I want to go to Kisumu or do I want to go to Kericho farm tea, or go to Murang'a where I'm just a general farmer with mangoes and everything, or do I want to go to areas like maybe Makueni where it allows me to grow fruits? It's a decision you make. This is the same with the sectors. They have specific stocks which perform differently and they are affected by different factors. So put your money in the right one. It's a decision you as a client you make after making analysis. And I hope I'm not giving you more than I'm supposed to. If it is a lot, I think from our research reports you get all these. So this is just a checklist before you buy stocks. First of all, profits, whether they are going up or they are making losses. Dividends and bonus history. Have they been giving dividend? It means they continue giving dividend maybe in future. And those are stocks, first of all, that should come in mind. Dividend bonus. Anything giving dividend bonus, it's free money. Then company news, how their news are reporting that company. Then if sector is active and promising, you don't want to get into a sector that is not active. Then their debt performance, whether it's high or low, or if they are able to manage that high debt, and what business they do. Don't buy a counter bribe without knowing what they do. Why? Maybe your religion does not allow you to buy stocks that give dividend and you're buying them. You see, now you're going against your dividend, yet there could be Sharia compliant products which you can buy stocks. Maybe your culture does not allow you to invest in certain business lines. So those are some of the things you need to look at. So we go to the next step. Now you have bought it, you want to sell. Then when do you know when to sell? Knowing when to sell is just important as knowing what to buy, because you have bought. Do you want to sell at a profit or do you want to sell at a loss? Do you also want to buy a stock and hold it blindly and your hit may be by delisting or suspension? So don't just hold on a stock blindly. Watch for signals, red flags, and act smart. We will start with the red flags. They always signal to time to rethink about your portfolio. Sometimes a stock may show signs of trouble ahead. So if you spot any red flags, it's time to consider selling. But I'm not saying you sell. I've used the right word. Consider selling. I don't want you to quote Peter said, I go and sell. That is, you spot a signal, time to sell. Why? Let's go back to the case of Mumias. What happened with Mumias? Fight. We are just thinking, these are just normal fights. It's politics of Western. Peter is here in Nairobi. He's not thinking this politics from Western can affect him. I've bought 1 million shares of Mumias. That is only revenue that I had. I'm pegging that Mumias have been giving me dividend, and there is potential of selling high, and I make maybe 5 million. Peter ignores the noise from Western. Mumias is in court back. They are suspended by CMA. They are back. They shut their factory. They are back. Peter thinks this is just normal. Then one day, what happened? Switch the button and never go back. It is not trading. Peter is stuck with 1 million, which he can't sell until CMA says you can now sell tomorrow, or you pay reimbursed, maybe full amount, or maybe full amount with the interest, or part of that amount. If it is part, then I'm losing. If it is full amount, this amount have been there for the longest, I've not made any gains. But if I watch these news, these fights, people coming in, strong sugar factories coming in, everybody now moves to them. I would have stuck to that signal. Maybe I would have been hit with a 2 shillings loss per share. I sell immediately, then come and say, let me put this money in a stock that is giving me dividend. I recover my losses. So when you're selling, rethink, I am making losses. These are the losses I will make. Actually, put them down. You see, if you want to clear a loan, the best way to do is list them down. Don't even be ashamed of listing them. Then you decide, I'm starting with this loan to clear this. That way you clear your loan. It's the same thing. I'm making this exact loss. Don't shy away. It is 100,000 I'm making loss. But I'm gaining, I'll get maybe 800,000. Yes, let me see out that 100,000. But this 800,000, if I come and buy, let's say equity, and I divide that price, I see the number of shares, they are declaring this dividend. And I project my dividend in the next 5 years, I will have regained my 100,000. There's nothing that stops me from selling that stock. You get out of that mess until they sort out their mess. And when they sort it out, you again check, how long can this last? If you see there are red flags, don't even think about getting back to that stock. Move like a bullet is following you. Go to another stock, buy dividend stocks. So some of the red flags is falling profits. If a company earnings keep on dropping quarter after quarter, year after year, it is signaling struggle for long term. If they are making losses every year, and you notice these losses are way too high, 3 billion profit last year. Now they make 1 billion. Already they have lost 2 billion. That should be a signal. Start watching that counter. Again, it's it. Always check the price. If it is going down, it's time to think. Do I want to hold this stock? Or do I want to sell, get into a dividend stock? So if you see profit falling, it's not a good sign, but that does not mean you sell. Check whether they are giving dividend. If they are giving dividend, then you don't need to worry. Check the sector they are in. Are they performing better? What index are they in? NSE share index. If they're in the top, then even if the profit are going down, you can still hold. Just go to our research report, see what they are saying. When you see a major red flag, like a court case, my friend, it's time to fraud before it is suspended. Or you wait for it to be suspended, you wait for court case. How long will it run? It's only the court that can tell you. And remember, the problem with the court case is politics comes in. And when politics comes in, that's the end of that court case. Even the court will put that file aside. Until you finish politics, we'll get the file. When will politics come in? We read. A politician comes in, leaves, another one comes, takes over now. He adds even more fire. What case we never had? You are stuck. That's why when you see politics, fear supporting them, because they affect you as an investor. Even if it is not directly, to affect you indirectly. Let me give you something that happened just last month. These demonstrations by the people you are calling Gen Z. Me, I think I'm beyond that. I'm beyond Gen Z. But the first thing I was worried is market. What will happen? Just take a minute and think, what would have happened if governments didn't act? You know, we see government coming in, they beat, kill, do whatever they do. But just think, if the so-called Gen Zs continued, what would have happened? They start targeting M-Pesa shops, target Safaricom shop, they target Safaricom mast. They have brought down Safaricom. What happens to their share? It's things we can't see. And they may be in our control because these are people who have parents who can tell them don't go. They started banning shops. What if they targeted the source of those products? We know some of these companies where they are. If they are targeted, what happens? That's why when you see politics, it's a red flag in the sector. They have potential bringing down NSE. And remember, they affect company performance. Profits goes down. And some companies are not able to recover from those losses. So when you see falling profits, always check what is affecting these profits. It could be politics, short term. Gen Zs have gone back as if nothing happened. Some of these companies will recover as if nothing happened. So that's why when even if you're seeing falling profits, check what is affecting that company. If it's Safaricom, they have reported a loss. Just check, is it politics? Is it maybe because there are times we are told, let's boycott Safaricom. But do you know what you're doing when boycotting? Their profits will go down. It will affect you directly as an investor. But we are acting based on politics, not forgetting when this profit goes down, what will my portfolio look like? And remember, you are giving somebody else another chance when that price goes down to buy the stocks at a lower price. They will gain when price goes up. So always check foreign profits, what is affecting that company before making decisions. And always check their financial results, audited and half year. They are usually posted on NSE, CMA, CMA, I'm not sure whether they post those, because they'll be posting a lot. But NSE, I know they post. AIB, we post for free on our website. Go to that company website, they will get everything. Even more information. Don't shy away from reading. If anything doesn't make sense, our research team are there. Drop them an email, ask them, I've seen this for a company. Tell me what to do. For those who have sent questions to me about research and have connected you with our research team, you have seen how fast they respond. Because they want you to invest. Then the other red flag is a company that have not been giving dividend. Let's take an example. A company keeps on giving dividend, good dividend, and all of a sudden they stop giving. It means they are not making more profits. Or if they are making profits, something is affecting that profit. That's why you need to check a company that suddenly stopped paying dividend with no plan. If they stop paying you dividend and they have not said why, a red flag. There are losses either, or that money is being channeled somewhere else where it will not make money. But if they stop giving you dividend, but they say we are investing, that's a growth stock. You expect prices to go up, so you hold now that stock as a growth stock. When they make money, when the prices go up and you make money, you can sell or hold it in lifetime. Expecting now the prices either to stabilize or keep on moving up. A company may stop giving you actual cash as dividend, but they are giving you bonus shares as dividend. Don't even think of selling that stock. You are being given extra shares you have not paid for, which you can sell or hold. When they say pay another dividend, remember these extra shares, they also give you another dividend. Or you can even decide to offload them. So if you see these signals where they stop giving you dividend and they have no plans, it means cash flow issues. That's what happened with Mumia sometimes back. They were giving a small dividend, then stopped. At that point, it signaled trouble ahead. Those people who decided to get out, they are safe. But it does not mean, since they were suspended, you don't hold shares. They are in CDS. Just go to your portfolio valuation, you see, but they are not trading until CMA lifts that suspension. So like, let's take an example. BAT, they have been giving a good dividend. If they just suddenly stop giving a dividend with no plan, they have not said anything, you need to worry. And that's where now you rush into their financial statement and see what is affecting them. Check their statement from their management. What are they saying? If it is something that is signaling the flags, offload that counter, buy a dividend stock. Even if you offload at a loss, you're buying a dividend to recover that loss and continue enjoying profits. That's why I insist, when you offload a stock, first thing, go for a dividend stock. Regain that loss you made with the other counter. Once you regain, now it is the decision you need to make. Do I need to continue enjoying these profits? As a smart investor, yes. However, you can decide, let me sell. But then you're selling a company that is giving you dividend. So what do I mean? If you're selling a stock at a loss, always recover with a dividend stock. Buy a dividend stock before you draw that amount. Recover your money through dividends. Count dividends. Know how many dividends you need to receive to recover. Then sell that counter when it makes profit. That is if you feel you need to exit market. Then look at governance issues, because these, again, they play in company performance. If directors, they are just resigning, there is an issue. Employees, they are just complaining, they are resigning. Check. The first thing, financial statement. How are they performing? What is the audit saying? If auditors, they are raising queries, second thought. If it is in court, often, today they are in court, like what used to happen with Mumias. They file a court case, they win. They file another one, maybe they lose. A politician comes in, says, it's time now to take you to court, you have not paid our people. It is signaling something. It does not mean you exit, but first check news and check any other, and don't rely with bloggers. Don't rely with bloggers. A minute, I connect my laptop to charge. Don't rely from news from bloggers. For one reason. What stops a politician from paying Peter to spread fake news about BAT, about equity, about Safaricom? Remember, it's all about what I'm receiving. Yes, Peter. Even if you see a blogger saying this company is doing this, first thing, go to broker's report. Confirm whether that is reported by broker. Go to that company website, confirm it is there. Go to Business Daily, confirm it is there. If it's not there, actually block that broker. Remember, you're putting your money to make money, not to lose. And politics have interest, not just from brokers, even from people outside. Whatever they are saying, before making decision, before even listening to your peer, confirm. From reliable sources, broker websites, one of them, AIB Access. If you have an account manager, ring them. They usually have this information before even it is released to you. Remember, it comes to our research before they package, everybody knows in the company. Then it is released to you. If you know connections at NSE CMA, ring them. Get the right news. Don't rely with social media. It can make you make wrong decisions. You sell a counter which have no issue, then you end up making losses. So always don't wait. If you see any governance issues, don't wait to be a victim. Even in brokerage, if you see a broker have an issue, do your research. And if your sixth sense tells you time to go, don't even wait for the 5. The 6th, we know we already have 5. If the 6th one tells you, what? Time to move. It's time to move. Don't even rethink. You don't lose the number of shares. That is the most important. Where you are not losing the number of shares, never even be worried. Because when you move, the price continues. If you feel I'm not comfortable with this talk to research, talk to account manager, call in brokerage. And if they don't pick your phone to answer your question, try the next phone or the phones. If they don't pick that, remember it is your investment. Don't wait to be a victim. I will come to Q&A. I've seen a question on equity and Century. So as an analogy, let's take an example. You're using a boda, and he's trying to start that boda, and you realize some things are not working. Do you want to go and get into an accident? It's a question you need to think, because it's the same thing you're doing here. You're playing with your money. Here you're playing with your life. Do you want to play with your life with a boda where there are issues? Do you even want to even think about it? That's the time you turn, even board the next matatu, even if you didn't want to go with it. In that matatu, maybe they have promised, they make fake promises that when you get in, they put that music you like. I don't want to say they charge you less. The music, they put some nice music, which maybe this boda will not have revenue. What I mean is you are getting into another stock that will give you dividend. I hope now you understand. So before you sell, there are times when you need to lock in profit. Remember, the goal of investing is to grow your money. You're not just putting shares there. You're not just putting your money there. Otherwise, it could have helped you do something else. So if a share price have really rise, it could be time to sell and buy another stock if they are not giving you dividend. If you realize these prices have gone way high. It has stagnated there for some time. There is no dividend. There is no price movement. Same, you have already made your gains. Get out, get another stock or asset. And here asset, I mean either bond, fixed income, or you invest in funds, or you invest in international stocks, or you get out of stock market, you go to insurance saving plans, or you go to your pension, or you buy a plot somewhere, something you know has value in future. So rocking profit only do it if you research have said that stock will continue moving up. That's why when you're buying stock, always have an exit plan. What price do I want? Your target price. But if it is giving you dividend, don't even think about exiting. Don't even think about that target price. Just take it there as a figure that is just there to remind you you can sell, but you are not selling. But if it's not giving dividend, price have moved up, it's time to rethink. Let me exit this counter, because ideally your money is stagnating there, and the best thing that can happen is price goes down. And sometimes it can go significantly down, so you might lose. At that point, exit, buy a dividend stock. Let's say you bought a beer at 130, it has risen to 170. The difference is around 40 bob, Kenya shillings. Remember, international stocks is in dollars. So you already have like around 30% gain. If this stock is not giving dividend, and this is an example, I'm not saying ABR, they're not giving dividend. They give good dividend. It's time to move from there to another stock. So you can sell either part, or you sell everything, take your profit, reduce risks, buy another stock. So why did I say part? It's not a must you sell everything. It is your stocks. It is you to decide. Let's say you have bought 1 million shares of EAPL and you have an emergency that requires you 50,000. There's nothing that stops you from selling shares worth 50,000. Leave the others there. Sort your emergency. Then EABL, maybe EABL will give you a dividend that you recover that 50,000. So when you're selling for emergency, always check dividend stocks. Don't look at the growth stocks. If you're looking at stocks that are giving you dividend, you recover through dividend the amount that you sell. If you're looking at the prices that are shares that appreciate in price only and they are not giving dividend, then you are selling part that maybe you never regain. That's why I'm saying, if you have an emergency, if you have shares, look at a stock that will give you dividend maybe next week. Sell part of it, use that to pay. Then that dividend you receive, don't use it. Come and buy that stock. You continue enjoying. That's when you're buying stocks. Always have a target price and stick to it. When stock moves to that price, and you see there is no future in that stock going above that price, exit. That is, it has stagnated at that price for some time. Exit, buy another stock. And when buying another stock, always think, did I make loss? Recover it with dividend stocks. Let me see time. We are ready. 2. I think let's continue. And if you have any question, put it on the chat. Then the other time when you want to sell stock is to recycle into a better stock. Sometimes when you're looking at stock index, that's why stock index is very important. Even if that term looks complicated, through this training Wednesday, I'll try to make it very simple. Till that time, it will be like a layman term that you understand. When you realize another stock in an index is performing well from your stocks you are holding, rethink. If that stock is not giving you dividend, it might be time to sell. If you have made capital gains, you look at the price you entered with against the current price, you have made profit. The beauty of the IB Digitrader, an online portal, It already have that. You don't need to compute profit or you're making loss. If you see green, look at the amount. If that amount is good and that counter is not giving you dividend, sell it and go to a good dividend stock or a hot sector. If you're buying growth stock that just appreciate in price, then always know you're a short-term trader. When it gains, sell. But if you're selling a growth stock to buy a dividend, then you're entering into another world of long-term investor, because this dividend stock never sell it. Use this dividend to buy growth stocks. When they appreciate, sell, buy a dividend stock. A good example, you hold KQ, which hasn't moved for some years. Do you still continue holding onto it, and prices have stagnated there and you have made gains? But on the other side, KCB or equity, they are telling you, I'll give you a dividend of 5 shilling, 10 shilling. Do you still want to hold that KPOC? And you have a counter that is giving you a strong dividend, which is just a pure profit, which you can come and reinvest again on KQ if you still want to go back. So you sell KQ, buy KCB. Don't withdraw that money. You know, there is that temptation, especially on DigiTrader and Portal. You have sold and you want to check on your funds. You go to funds screen. The first thing you see, you actually don't see deposits, because you know Monday sometimes makes us lose concentration. You see withdraw button, hit withdraw, you use it. Don't go to that screen first. So you know how much you sold. Go to statement, see it. Now go to funds and ignore the 2 buttons. Don't be tempted. Unless you want to add more money, don't be tempted. Look at trading space. Know how many shares can I buy. Close that screen quickly. Go to KCB or another stock, buy. When dividend comes, and you already know your M-Pesa balance, then you hear that message. Actually put a separate ringtone for M-Pesa. When that dividend comes, that ringtone, when you hear it and you know it is dividend date, you hit deposit button immediately and put that dividend in. Don't be tempted to use it. That's how you grow your stock. You'll see how you can grow your stocks from 1 million, from 1,000 to 1 million. Very easily with dividend stocks if you're consistent. So analogy, it's like moving from a dry farm to a greener one before planting season. So you have bought a farm in a dry land. Do you want to continue holding at it? What time will rain come in that area? You know, those are questions you start asking yourself. Whom will I sell if I want to sell? But then if I have an opportunity to sell it today, and there is like a farm there where I can plant my potato in, is it Nyandarua? Which area is it, Nyandarua or Nyeri? There is one which have potatoes. Do you want to move your money there? It's a decision you make quickly without even thinking. If you get a buyer sale, go to that RAD that will give you returns. Remember, you can plant those potatoes and then they give you returns. You are looking at returns, you are not looking at where the shamba is. So let's continue. So if you are putting your money in one sector, it's very dangerous. Not even one sector, one stock. What happens if that stock button switches off? Nobody thought Mumias would shoot a button off. Nobody thought TransCentury. Nobody thought of other stocks which have been delisted, mergers and takeover. If you have put your money there, what happens? So if one sector, let's say you are concentrating on one sector and they are affected, like banking, and all banks are affected maybe by interest rates. There are also other issues with policies. Then your whole portfolio suffers. So if you are targeting a certain sector and it is affected, always know that is a risk you are taking. But as a risk taker, you need to diversify. Don't just buy one stock, even if it is same sector. So you can also check if some of the sectors have grown a lot. That is the stocks that you have bought in specific sectors have grown. It's time maybe to sell and invest in others that are devalued and which will appreciate in price or they are giving dividend. So those are two things you need to check: appreciate in price or add giving dividend. Always let that ring before you buy or sell. Is there profit? Is there dividend? So let's take an example. You hold 70% in Safaricom. You can sell some and maybe buy energy stocks, energy sector, maybe KPLC or Kengen. Remember, these are brother and sister. Or you can go to BAT or equity in banking just to spread those risks so that you are not affected. Remember, some time back, energy sector, nobody wanted to touch it because KPLC. And KPLC, remember, directly affected Kengen, though Kengen was still performing. Remember, KPLC, they are still paying Kengen, so Kengen is not affected. But KPLC, they used to have their own issues. But what happened? Price shot 10 times. They have even started announcing dividend. So you start now from those news. Now you can decide, let me offload maybe some Safaricom to buy KPLC to start enjoying dividend. So as a summary, this is a checklist. Company profits falling, that signals you can sell. No more dividends. Remember that counter, unless price appreciates, then there is nothing else you gain with. If there is any suspicion on board activity, reported not by brokers but authentic sites, and audit issues again from audit sites or financial news sites that are genuine. Or you have hit your profit target. You don't need to continue waiting unless there is a projection of price going up. Again, you need to reevaluate your profit target and maybe raise it to some other level. Or there's a better opportunities elsewhere. There is like a dividend that have been announced somewhere else, or you are concentrating too much on one sector. Unless it is Sharia compliant investors, because for them they have limited investment in NSE. But in international stocks, I think now they have exposure to so many other areas to invest in. For Sharia compliant stocks, we don't have a lot in NSE, and hopefully companies can continue listing, or NSE becomes innovative enough to bring stock in international stocks in NSE trading platform, which I'm not sure that can happen. If that can happen, then NSE can open world to investors, and that way now they will have a lot of stocks to buy from and diversify. The rest of us don't concentrate too much on one sector unless you are doing research on that sector actively. So again, choosing what to buy or sell, first of all, there is something you need to check called dividend versus growth stocks. Dividend stocks, you buy and hold. Why? They pay regular income as dividend. Remember, you're not selling your shares when receiving dividend. It's extra cash. And there are so many examples. These are just a few. And the idea for passive income seekers. Remember, this is money that is coming in. When it comes in, put it either in another stock that is giving you dividend or another asset that is giving you money. Bring it to international stocks. For those who have tried it, when we announced international stocks, the investors who came in, and they can tell you, a single gain in dollar is not the same thing as a single gain in Kenya shillings at NSE. Remember, a dollar is equivalent to 140. So in Kenya market, that small movement may not mean a lot to you if you don't have many shares. International stocks, even if you have small stocks, they'll give you high gains. But remember, entry point is higher. So that's the only thing you need to know. Whatever you are putting in is higher, but could be the same as NSE. But again, a small move in dollar is a lot compared to NSE. It's time to rethink, but don't sell your dividend stock to buy international stocks unless you're coming to international stocks to buy a dividend stock again. Only sell growth stocks to come to invest in international stocks. Well, then what is growth stocks? These are stocks which you can buy and sell, and you gain through capital gains. Reinvest this profit and money you have gained to expand, maybe in dividend stocks or other assets. It's ideal for long-term capital growth. Analogy of dividend stocks is like your rental house. They keep on giving you dividend rent. This rent you're getting, remember you have not sold your house. So it is the same as dividend. So the houses are the stock. Rent here is dividend. What happens when you sell that rental house? You lose rent. So don't sell dividend stock. And what happens when you sell in between the month and the rent is due on that year? You lose. That's why for dividend stocks, never sell before and including book closure. Growth stocks are like buying a RAD to sell at a profit rate. Remember, RAD is not giving you any returns unless you rent it or build. It's just their speculation. When it rises in price, you can sell. So again, choosing what to buy or sell, you need to have some strategy, either technical or fundamental analysis. Technical is where you now focus on price charts, trades, and volumes. Prices movement. Are these stocks moving up or down? Trades. What has been happening over time? Has this counter been performing well? This is where charts comes in, and I'm not talking about candlesticks. Candlesticks, we have seen them in Forex and also international stocks. Yeah, I'm talking about graph, just a general graph that shows you pattern. You don't need those candlesticks to understand those graphs. Or you're checking volumes. How is the volumes moving? So you are doing a technical analysis. And tools that you can use is moving averages, RSI, and candlesticks. Candlesticks, I hope it is there on DigiTrader. If it's not there, something we are looking at adding, because we are used to them in Forex, CFDs, and also international stocks. It's always good we mirror that on our side, but they help you now do technical analysis. And it is ideal for short-term traders because you're checking how these counters have been performing to decide, do I go in, do I get out? Then there is a fundamental analysis where you focus on financial health of that company. You check their financial statements, what they are reporting, their earnings from the same financial statements, and business model. These you can get from any company's website. Check what are they projecting to do in future. Are there any future growths? And that tells you you are not thinking of selling that stock tomorrow. You're thinking if they do this innovation, price goes up. It's the tools that you use is PE ratio. We'll come to that. Then there is revenue and the debt performance. PE ratio is a price to earning ratio. For those who don't understand the terminology, you see it in our research reports, and it is ideal for long-term investors. So for long-term investors, they use fundamental analysis. Short-term traders, you want to buy today, sell tomorrow. You are checking price movement in those graphs. So you can combine those both as a smart investor, because now it tells you what you start to gain. Tools that you need to have before making any decision. One of them is NSE price list. It has everything. Prices, they are there. Volumes, movers, NSE indexes, corporate actions. I think sector by capitation, if I'm not wrong, it's also there. Everything that you need on NSE price list, it's there on our website. You can also find out active stocks and how they are gaining from the same price list. Our research reports, I don't need even to go into details. You just download any of them and tell me whatever I've covered last week and today, whether it's not there. Company financials, these you can get revenue, profit, debt, cash flow, and any other you want. you can access from company-specific websites like Safaricom. You can get there. Why? They are mandated by CMA to make this public. Even brokers, we are mandated to publish our financial results so that you know what you are getting into. And you can also get these on our website or NSE. Why? You need multiple sources to confirm data. We said information that is on social media is not verified. Because I could be paid to say something. I don't want to say something that happened to AIB Access. You saw it and it trade for some time when we did announce our intentions to invest credits. And I'm not calling, I don't want to use that word that was used, idle cash. It's not idle cash, nothing called idle cash. It's money that is sitting with the AIB and you have not used it for some time. It is not helping you. That's why we said we'll invest. But what was reported? Idle cash. And whoever reported knew what they was doing. Unfortunately, it worked for AIB. You know, sometimes when somebody targets you, you might turn that into your advantage. Because then you realize after you open now the document, it's not what was supposed to be reported. And news for them, they put a catchy heading so that you click on that link. Once you click on that link, you get on their website, subscribe, you become a subscriber. They have gained a new follower. But did they tell you the right information? That's why you need multiple sources to confirm any information out, including what is posted on Business Daily. Confirm from multiple sources. The only source that is reliable is anything coming from CMA. It has to go through NSE or the brokers. CMA have the final and right information of any company. I've never seen them contradict any reports they do. Because that is already approved, not only by the board of that company, by shareholders and any other auditor they may feel needs to go through that report. So anything stamped by CMA is official. That's why I said AIB website, NSE website. Those information usually come from CMA. We don't publish anything that is not approved by CMA. So let's come to key ratios that you have seen on our research reports, and we try to explain it in a way you can understand. We have a PE ratio. We have seen it in the previous slide. It's price to earnings price to earnings ratio. Price to earnings ratio. What is the formula? Is the price divided by earning per share. It is used to measure how expensive a stock is. Because when you're buying a stock, you need to know, am I paying more or less? Is this share expensive or not? So you compare various stocks. That's why you need a spreadsheet. We'll come to that. To be comparing your stocks and always check, am I paying more for this stock or am I not? Which stocks do I pay? Am I paying less? Which stocks am I paying more? So that when you're making a decision, you know whether you make profit at the end. Then there is a dividend yield. You have seen this a lot. When you're talking to our team, they will always tell you this. The formula is the dividend that you're getting divided by share price. If they are declaring maybe a dividend of 10 and the share price is 20, so your dividend yield is what? Is now 10 divided by 20, which is around 0.5. So it tells you how much return you get in cash for dividend stocks. So let's take an example. Share price is 100 and they have declared a dividend of 5. So you're dividing 5 over 100 times 100 because it is a percentage. So you find in such a case, you're getting 5% yield. So it will tell you now you are getting 5% as a return. So you do again for all stocks and see which stock gives you higher yield. Again, next week, we'll do this in an example so that when I'm buying a stock, practically, I'm not buying to show you how to execute, but I'm getting the stock knowing I'll get that yield. Then there is a market capitation. This you get in NSE price list, just next to corporate actions. You get those figures. The way it is calculated is share price times total shares. So it will show you company size. So you can tell whether this is a blue chip or a small cap. Like Safaricom, if you are to take the number of shares that have been listed times the share price right now, you realize this is a large cap. It's not just a small. But take Eveready or any other stock. And that now will also play part when you're making buy or sell. Do you want to buy companies which have higher size or lower size? Again, the profits you're looking at getting and performance of that company. But that does not mean Eveready is not a big good stock. Why? It's trading below 1 shilling. I've given this example a lot. What happens tomorrow if Eveready decides? People, right now, we are buying electric vehicles. We have electric trains. We have electric buses. They need battery. To import that battery, even if it takes 5 years for that battery to be worn out, how much can I import that battery? Can Eveready make it? Can they import those raw material and make that battery? It's an innovation that will trigger price movement. You find Eveready moving to 20. So when you are buying, always look at these company websites, see if they are thinking of innovations, because that will trigger price movement. And I'm sure this could have happened with KPLC, maybe something happened. But always check these innovations. They know they are not short-term innovations that then will crash the prices down. So again, let's take an example of a company like Safaricom. It could be a growth stock and also a dividend stock, because they give actually this is a dividend stock, because we have seen them give like 3 dividends in a single financial year. If they are dividend yield, that is, you take their interim dividend, special dividend, and final dividend. You total that, then you do with the price, and you find it is around 4%. Then the growth potential, it's high. Already this is tech driven. Risk level, yeah, it could be medium. So you start classifying your stocks. But these are examples. Don't take this as the final. KPLC, and I'm talking KPLC that we don't know right now in the market. The KPLC that was there before. Trading below 2 Kenya shillings. It could have been a utility stock because it's not giving you dividend. Prices are not moving. It is just there for you to put money. Utility stocks, you just put your money there. No dividend, no profits. Their growth potential is low, but the risks, they are high. Remember, shutting we said that button, suspend, is very high. It's very likely from CMA if any issue comes up. But now we have seen it move to a growth stock and a dividend stock, because they have started giving dividend. Look at BAT, it's a dividend stock, they give good dividend, and their yield could be around 12%. Yield, what do you say? Dividend yield is the dividend divided by price, its share price. And this dividend yield keeps on changing. Remember, price, the average price keeps on moving. Its growth potential could be moderate, because remember, for a growth stock, prices are moving high. Dividend stocks, you might find after dividend price readjusts. That's why growth is moderate, but risks are very low because you have dividend that is factoring everything, every other losses you get. So from above table, what we can learn is BAT can give you a stable income. That's why you need to do a spreadsheet that does this analysis to know if a stock gives you stable dividend. So you check even history of their dividend, how they have been given dividends and bonuses. If they have been doing it frequently, know that is a stable stock. That's how you classify a stable stock and just a stock that will be there. Then Safaricom, from the example above, may grow fast, but it may also be affected by tech changes. A good example, these days, you don't even need to Google. With ChatGPT, you can do everything. So ChatGPT came and changed Google. Google, they were forced even to adapt this AI from ChatGPT to develop their own. Look at what Meta are doing. They're also trying to compete with Safaricom. What stops another company from innovating and giving us maybe a tech that I've never been seen? Yes, we are talking on the phone through Safaricom. Can another company come and give us real-time chatting where I'm just getting into video, I'm not paying anything, and you on the other side through their platform, we are chatting, we can see each other? Can we also use virtual reality where we wear those virtual machines? You are in India, I'm here, but we are chatting like we are together. What will happen to Safaricom? And I'm talking about Kenya. You are in your office, we are doing this presentation. You can see like I'm in front of you. What happens to Safaricom and other internet service providers? They are done. Remember, we are not using internet here. It's the company giving you full service connection without even going through internet. Maybe I don't know what will come and do that. That can change Safaricom performance. So you start now analyzing stocks like these. And all these, you don't need to do it. It's there in our research reports. If you look like KPLC before, management and debts, politics. But again, I've said the KPLC we know now, it's not KPLC that was there. And again, I said politics. I don't want to talk about KPLC because we might go into politics and you find maybe people are playing with prices. I don't want to go into details. Let's go through something we did last week. And from those slides we have seen, it's part of it. Dividend reinvestment and compounding. So what is dividend reinvestment? It is using your dividend you received from a stock to buy more shares. I don't need to expound this more. I've said in previous slides. You get a dividend by another dividend stock or a growth stock instead of taking money. If it is in international markets, don't withdraw money. Remember, for your NSE, you're being paid. Don't use that cash, return it, buy more shares. Either in the same dividend stock too, you're using this dividend to buy another dividend. So why it matters? You create compound effect where you are growing your stocks using dividend that you have not withdrawn from your bank savings, your regular income. You are using money you have received from this stock to even beef it up or buy another dividend stock. We are coming to another slide. So compounding effect is where you invest, your investment keeps on growing, earning you even more dividend next time, which then you return back and grow that dividend. We said you can use 1,000 investment maybe frequently to grow your investment to 1 million. It's possible when we see that slide. Analogy of compound effect, think of like you have eaten your mango, you have that seed. Instead of throwing it to the neighbor's farm where you are helping that neighbor, you plant it in your farm. What happens? Rains, another mango tree. Gives you so many fruits. And that just one single seed can plant so many other mangoes from the seeds that will come out. So over time, you have a crowd of mangoes in your farm. The same thing with dividend. That's why I said you can use small amounts to grow to 1 million. We have grown one seed, one plant with so many seeds. We throw those seeds, we grow another many trees. So then how do you reinvest? You have two options. One of them is return back and buy more stocks of the same stock to accumulate more dividend. But remember, that stock may declare dividend next year. That's why I used Safaricom, because they had an interim dividend. If you paid that interim, you know they will give a special dividend. So you buy Safaricom more, you get more in special dividend. Then use this special dividend to buy more stocks to get final dividend. Well, what is a special dividend? Is when a company makes extraordinary profits and they want to share that with you. Remember, dividends are profits. Half year audit is done, they declare a dividend profit, they say let's share. Then in between they make another extraordinary profit. Maybe you as the investors, you have been told boycott Safaricom, but we have come in, bought even more. They make extra income. They decide, let's share that with you. That's where special dividend comes in. Huh? So when you see a company paying special dividend, they have made extraordinary profit. Huh? And always check before that, there will be cautionary information where they want to announce profit warning. Huh? Then we have final dividend after books are audited and they have declared profit. However, the second option is recycle into a new dividend paying stock. And this is the most important thing, dividend recycling, where you are paid dividend by Safaricom. Then in a few days, there is a book closure for equity. You buy equity. Then you check book closure for equity. So you have bought shares for equity, book closure. You know on book closure you are getting another dividend. So it is paid on a certain day, X. After that X day when equity pays you dividend, BAT have announced another dividend paid in another days. So you are using these dividends to buy another stock that have declared dividend, or even adding more if you have shares to get another dividend, to add more to another stock that have declared dividend. So you are creating a cycle. You find that in the long term, you have not only surpassed the 1 million we'll see in the next slide, but you have created a cycle of income that you'll be getting even in your retirement. This is called dividend recycling. So what is the power of compounding? This is where now we want to argue. Can I use my 1,000 to get 1 million? Yes. The scenario here is you buy dividend stocks of 1,000. Small. You can be putting like today, you divide with the price of Safaricom, maybe it is 50 shares, buy those. Yes, you are out at ODD. You can buy 1 to 99 shares, or you buy in multiples of 100 in Morot, or you mix both. If you are buying like 150, 100 in normal, 50 in ODD. Keep on doing this regularly, maybe weekly, maybe daily. You don't even need to put 1,000, you can put 200, Bob, if you're targeting those small stocks, but make sure they are giving you dividend. So the amount that you are putting in, divide by the price of shares to see how many shares you can buy. Keep on doing that regularly. When dividend comes, don't use it. Buy the next dividend stock. So you have used your small investment to get a dividend. Then this dividend you have returned to buy another dividend. Put small amount again, beef it up for the next dividend for that stock. Buy more, get a dividend, return that dividend, continue again, and you keep on recycling. Within time, you find you're not even putting your money in. It is dividend that is buying another dividend stock. So if you're investing, let's say, in a stock that is giving you 8% return, that is dividend yield. Then making up to 1 million is very easy over time. And you only need to be patient, don't sell. So reinvest every dividend, recycle every dividend, compound any dividend. Remember, compounding means investing on the same stock, or recycle, put it in another stock. In a span of years, you have grown your investment. Why? Every dividend is earning its own dividend. We have said we are using dividend to buy another stock that is giving dividend. So this is when our spreadsheet comes in. It's called dividend calendar. You can create it on your own, but I will also create a template which I can share. It will help you plan ahead before buying dividend, before dividend book closure dates. So you are listing stocks and their book closure. Know which companies are paying next. So I've put Safaricom book closure is on 30th. So I think, again, I got price list. What I need to know, book closure for Safaricom is 30th. Which other stock is giving dividend after that? Then you list them. Then on each list payment day. Now compare. Safaricom is paying on this date. Book closure for the next paying dividend. Which company falls maybe a few days after this? It is this company. Mark them with green. You buy Safaricom. So you know when the dividend for Safaricom comes in, I'm buying the next green counter. The one highlighted in green, you buy. When it gives you that payment, you come and check the next green buy. But then there are these others which you have skipped, which maybe they don't follow in that cycle. Now that's where you put your extra cash to buy them so that they give you dividend. Again, check the next dividend. Use different color if it is red so that you know all reds belong to which dividend. All greens belong to which dividend. And with the time, you know what will happen next. And at the end, have the action. You are buying, I will hold because this counter gives dividend frequently. But if they have announced a dividend just once, that's why you see in the action after dividend, sell to buy another dividend counter. So that spreadsheet is a very simple Excel spreadsheet. And you can use it now to track your portfolio because you only be updating the number of shares in their profit and the price you bought at and current price, so that you also do those dividend yields and price to earning ratios. So let's take an example. BAT is paying next month. So you can use your Safaricom dividend, maybe that was paid maybe last week to buy BAT. Once you receive BAT dividend, buy another one and you recycle it. That's why I called it dividend recycling. We come to the last few slides where most of us maybe may not want to hear this, but it's the reality where you create succession planning and also family wealth transfer. You're not investing for yourself only, you're investing for your kids and your family members. Let's do a reality check why you need to have this succession planning. If you pass without a plan, what happens to your shares? Have you ever asked yourself that question? They stay in CDSC, nothing happens, nothing. Price keeps on moving on brokerage side, nothing happens to your shares. No profit, no loss because there is no sales for a lifetime. Maybe even your family member may never know you had shares, they stay there. Remember, shares are not like cash which can be sent to unclaimed assets. No, shares remain with CDSC because you're owning shares in a company. It's not cash you have in CDSC, it's shares. They cannot be sent to unclaimed assets. So what happens? Your family may never know you had shares. Maybe even their descendants, maybe at one point, somebody may say, hey, this is my grandpapa's or grandmama's ID. Let me go to CDSC, I check. Maybe they had some, they find you had millions, which never helped the family. Or somebody clever forges, they go and forge a marriage certificate, takes your ID. goes to CDSC. Hey, here are their shares. What prevents them from taking those shares? Will they help the people you intended to help? I don't want to give a good example with myself, but families face legal issues where you people, you don't even want to decide who gets the shares from your late parents. You keep on fighting, It goes to court. You are there fighting. You go back as family. Nobody wants even to talk to each other. You have delays. These are legal delays. At other points, you are required to pay money to lawyers. Unfortunately, even you find other crooked people want to take advantage of you, start charging other crazy fees there. You don't have this money, so these shares are stuck there. But if you have a plan, trust me, they walk in to CDSC as if nothing happened at all, and they continue enjoying your investment. So always ensure smooth transfer, not only NSE, even any other investment you have, including RAD and anything else. Appoint beneficiaries. First thing, your children. Remember, when you and your spouse are not there, children are the ones to suffer. But if they are appointed as beneficiary, how will they suffer? Courts know them as the beneficiary. So let's take an example. You have keys to your house. You have locked them inside your house. What happens? Can you get to that house unless you break it? Breaking it is these legal issues and hustling for money to pay lawyers and other crook people out there. That's what I'm calling breaking that door to get those keys. But imagine those keys you had given another person a copy. They just come and open for you and life continues. Huh? So this is the reality. What happens? At one point, we used to say Vision 2030. How many years to Vision 2030? With 2027, you won't even notice those 30 years how they passed. You'll be asking myself, 2000, I was here seeing Vision 2030. It's just here. Politics will keep us busy until 2 years after elections. You are like, oh, so Vision 2030 was just here. It's the same thing. We can't outlive ourselves. Above, even if we go over 100 years, we can't outlive ourselves. And we have to live in the reality. If you don't have a plan, shares will remain at CDSC and they will never help anyone. No one sells a dividend. Remember, it was supposed to go to your bank account. There it is closed because bank realized this account have not been performing transactions. It is dormant. Set it to unclaimed assets, even like a small dividend. Now, your beneficiaries may only know when unclaimed assets start locating them. Remember, their work is to unite unclaimed assets with the beneficiaries. They'll go to bank, ask for beneficiary. Maybe you never appointed. Again, let them reinvest. They enjoy dividend until when your people can go to unclaimed asset and say, by the way, my parents had an account here, or my grandparents or my grandparents had this account. Remember, only bank, if you had dividend stocks, will unlock this thing of dividend. So if you had some beneficiaries in the bank, they'll be called by bank before that dividend is sent, that money is sent to unclaimed assets. That's when they start asking the hard questions. Give me a statement. They'll see, oh, there was a dividend. If they're smart enough, they go to CDSC with the idea, they realize there were shares. But then, did you appoint them as beneficiaries? They start fighting. Legal processes comes in, and they are required. Cash, lawyers, remember they don't know who they are going to. What happens? Unless you get a professional, qualified, they don't know which word to use. Somebody who is appointed by God to help you. Remember, you can lose a lot. Everybody is in business. So without a plan, you're leaving a gap. But with a plan, they will just walk into CDSC and tell them, we need actually to the broker, sit them down there and tell them, yes, you don't know us, but that is appointment. Just check in your records. Yes, that is true. What do you want? Certified statement for CDSC and portfolio variation. To the court. They just sit down and decide who gets what. That's it. Most of platforms these days, I've seen they allow you to even put beneficiaries with their shareholding, what is it? Your investment share portion. Like you can say this kid will get 30%, 30%, 30% if you have three. Always make sure it is in equal proportion. Again, you don't want to create that division with your children. If banks, they tell you you can put beneficiary with this proportion, just do that. Because when they are going to quote for that succession plan process, they not even need to discuss. The court already sees what you said. It's just giving them a document, which is here. That document will say what you said. Peter gets 30%, Mary gets, Faith gets, John gets, and that's what they'll be given. They will not even fight. They will not even have time to fight. What if you didn't do that? They have to first sit down and fight, a good fight, until the winner says, by the way, we have fought, but you deserve this, you deserve this, you deserve this. Then you say, it's okay, it's okay. Remember, here they are just taking without that will. And here they will not have any, unless it's people who are brought up with a good moral. Some of them, they might fight for that share. Some want more, some want less. Some want more, some want others not even to inherit. But with a good run, trust me, nobody will fight. And you can do it in Excel. Save it somewhere on your email. Make sure your beneficiaries have access to your email. Tell them this is where I've saved the document. Make sure that email has two-factor authentication so that when they are signing in, you can see. When you arrive, they can't inherit you. And make sure there is also no greed. You know, the other beneficiaries, when you tell them I have shared these, that's when they see an opportunity to get rid of you. So make sure you get that. Make sure they know. So that when you're not there, email is what he said. Nobody can dispute that. In court, bam, bam. Document 2 weeks. They have their shares. So there is a document that is required when doing succession, and also for us to move shares from deceased. There is a form we will see in the next slide. But now, if you already have a will, the family will only apply for grant of probate. So they will not have going to the chief. They will start looking for your friends. What did my dad or my mom say? The friend tells you, the friend who was told, maybe it's somebody who is old, they can't remember. You see now, when you have will straight, even the outside world do not know what is happening. Then they will just see your kids continuing with life. If there is no, then you apply for letter of administration. Remember, your beneficiaries have to appoint administrators, go to court, certify that, certify even what they have decided. Again, who wants to be an administrator with the people who don't want to share? Remember, it's a burden and a risk you're carrying for your family lineage. As administrator, you carry the weight. The court will come and ask you, why did you give Peter 1,000 shares? And the rest have not said. You are in for a few years. Before you know, you have lost even your own inheritance. So if there is no will, always have letters of administration, and make sure those properties, they don't go to an individual name. If it is shares, what you say, if let's say in your old age, what I saw even my parents do, they said the shares belongs to me, but in life interest of children are listed there. Nobody can come and claim it's only those people. So if as a parent, you would want to safeguard that, even plots and everything you have as an investment, just make sure, even your title, if you're not intended to sell that land, go and make sure you change This RAD belongs to Peter in life interest of my children. Even if I go and my wife get remarried, title says who? Even if we are not there, both of us, and my relatives want to take that property, what does the title say? It doesn't say Peter. Remember, if it says Peter, they can go and say we are the administrators. What stops them from taking that RAD? Maybe the kids are very young. But if it is specified you are holding in life interest, that is, as long as you arrive, that property belongs to you, but you're holding on your children. When you pass, it goes directly to them. They only need to decide on how they are sharing. They go to court, they get the letter to share and get individual titles. So these are legal documents proving someone has the right to handle your estate. The documents above there. You will need them to claim shares from CDSC, unfortunately, if the owner is deceased. Without any of these two documents, even if you camp at the IB Access for 10 years, we can't touch. We are bound by law, we are bound by CMA rules and regulations. So how does CDSC handle deceased investor accounts? They will require official letter from executors or administrators. That is, executor of the will. So if you have a will, you appoint who will do it. Or the administrators here. They will need official letter from them. Then a death certificate, then probate or administration grant from the court, and you fill in transfer forms. Those ones you do in the broker. Then what happens after that? Broker has two options. Either transfer to the beneficiary CDS accounts as specified in the letters. So if the court letter says Peter 100, that's what you get. So I will only open my account through the JTrader PAP. Account is opened, transfer. Then my other beneficiaries, the beneficiaries who are also listed there, open CDSC account, PAP shares. Or you can decide to sell. Then the cash is sent to estate account. And estate here is in quotes because you can decide. Let's say and it is paid to administrators. It is you to tell the court to pronounce itself with the letters that you issue to the brokers. What you say is what we execute. And not what you say verbally. It's what is written and stamped by the court. We will executing court instructions or what is in the will. So when shares stay in CDSC, they are not actually frozen because there is no loan you have taken. But remember, nothing can happen. So this is where you need to register beneficiaries. When you visit the IB Access, ask them for account opening form. It has beneficiaries section. Fill in. Even if you have 10 beneficiaries, make sure they give you those forms. I'll talk to our customer care manager. That part for beneficiary, feel like 20 if you have 20 children. Make sure it is scanned and captured in the system. That scan copy. That's what will be relied on. Remember our system these days, as I said, the IB have been innovative. We upload documents. Those are what the documents we rely on. Make sure you go with a copy and attach in your records so that when your kids come maybe to transfer, they already have that copy. They know what they are transferring. AIB have that copy. You will not have any problem. And this you can always update anytime. It's not a must update now. Can you add your children? Yes. But guardian manages the shares until they turn 18. But this is on, I will come to junior accounts, but beneficiaries, you can add your children without giving their details. Only maybe birth certificate so that another child can now come and claim. And what I've covered here, make it as part of your estate plan. What is your estate? Is any asset you own, including that pen you have. That is an estate. Because you own something. include all your assets in an estate plan. Make sure it is in digital format, upload in a secure area where your beneficiaries, they know. Originals, have a save, or you can take it to a custodian, maybe in bank, have it stay there. Make sure your beneficiaries know. It's like you're writing your will. Huh? So let's go. We have gone through that. Why add beneficiary to your CDSC account? They're the ones to receive your shares when you pass. Huh? Without registering, then your shares stay in CDSC. At one point, you never know what government will say. They might say even shares can be either released to other investors, or you lose your shareholding. Huh? You never know policies that will come later. You know, every government have its own policies. Huh? And there are delays from claiming them. Huh? It's like what you have done in your M-Pesa. Remember, M-Pesa, if you have just put your next of kin, they cannot be paid for your bills. You're only adding them to add a security for your investment, and make sure your investment goes to the right people. Junior investing. Have you ever thought about your kids learning about investment? Me, I learned about NSE when I was too young by just taking my parents' dividend check to a bank. And that's when I knew where this money is coming from. So I started getting interest. So let your child own shares in a company they know. Most of us, we go with our kids either to bank or to M-Pesa shop. They know Safaricom. Just ask any kid. M-Pesa, they tell you it is there. Just go to your phone. Most of them, ask them, do you know Safari? They will even take you to that icon of Safaricom. Start now training them, buying shares with some of these things that are common to them. Huh? Help them know how to track dividends. No, tell them, you have invested in shares. Your dividend will come to your Jabu Junior on this day. Already you're telling this kid, Safaricom pays dividend on this day. Show them on price list, this is how it works. By the time they are 18, they are smart investors. Huh? Help them. You're also helping them learn about business growth. You are nurturing this kid when they get out of formal education to have that business mind. And a question I would like to ask you, do you want your kid to be employed? Just look where you're employed. Do you want them to be employed, or you want them to come and empower themselves to employ others? Ideally, that's what you're doing here. If you are to compare CBC in Kenya with CBC in China, you would realize here we are starting. Let's say we are starting. Because a kid in India can assemble a phone. But give a kid here, they only know swiping games. If it doesn't work, throw that phone down. But what if you start nurturing them about business growth? That kid will grow with a business mind. It does not matter how you train them. Me, my mom and my dad used to train me in my native language, Kikuyu. It was so hard, some words, because you'd try to understand what it means. But with time, when I started now understanding English, I was like, oh, okay, this is what it meant. So it does not matter which language, as long as that kid understands. Even here in AIB, right now we are using the national language. But if I'm required to use language that a client will understand, I use it. If you come to the office and you're talking to me in a language that I understand, maybe you use Sheng. That's what I use. If it is Kiswahili, if it is a mix of Kiswahili and English, if it is the Kikuyu, I understand. If I don't understand your language and I feel this is a language, maybe I have somebody like that, we'll give you, because that's the only way you can understand. Huh? We don't want to make investment hard. And the reason why you don't see NSE growing, it's because this information we are going through here, unless somebody comes out to train you, you will never see it out there. So, in short, what are we doing? You are giving real life financial education And not just though they're not just going through theory in school, you are helping them go through practical course. And we know CBC, that's what is intended to do. So a kid comes and tells you, we were taught about dividend. It is you now to think, let me log into DigiTrader, let me go to NSE website, let me show them what this means in practicals. That kid will never forget. Benefits of early investment, I think these are the last slide. Again, the kid is starting small. You're just putting that 1,000 you'd have put in Jabo Junior account to buy a dividend stock. This dividend stock funds your Jabo Junior. So whether we are getting this. Instead of sending money to Jabo Junior, give that kid your M-Pesa. See, they know your PIN. If they know your PIN, help them deposit. Remember, DigiTrader, when they open account, they can access. Help them to know how to deposit. But remember, it is you to put the PIN when it asks you the PIN. Otherwise, you find that even if they wipe your M-Pesa, remember they're investing. So help them. Help them start small. With time, that kid will not even need to be employed. You have empowered your kid in future. And remember we said compounding effect and dividend recycling. That's the power of compounding growth and dividend recycling. Investing 5,000 annually for 18 years with a 10% dividend yield. You can check the figure that is there. Do you want your kid when they are going to college to have that amount? It's the pocket money for university. You'll be hustling on school fees, the actual fees, which you can either decide they take help, or you go to your dividends, which you have been reinvesting your stock, sell some, ignore the help, you say that this help, go to somebody else who needs it. You use your money to pay school fees. And these kids, you are still training them to continue investing. So what you are doing, it builds a base for school fees savings, even buying your first car and your child's first car. Who do not want their kid to drive? Helping them start a business. I asked you a question, would you want your kid to be employed? It's a question maybe you can answer later, because it tells a lot. Don't put it on the comments, because it tells a lot. And also early retirement fund for yourself. And remember, if you're employed or not employed, there is pension. Make sure you're also contributing to pension. Some of these things, they will play part in your retirement. Can a child open a CDSC account? Yes, but with your support. So you open as a joint between you and your child. Make sure in the bank you have a joint account called Jabo Junior or Junior account. But they can't operate this account directly. They need you to manage those shares. Don't let them, because they might decide to sell. So what is the process? Filling CDSC account opening form for joint accounts. You fill in, attach birth certificate, your details, sign on their behalf, open account, link to DigiTrader. Where they sign up, that's where now you link. Sign up is for linking. If it is opening an individual account or for yourself, you got to open your trading account. We'll do it next week. I will show you. So broker will help you set up same way as opening a savings account. Remember, the bank account you're giving is your Jabo Junior account that lists that kid as the owner. So dividends go there. For these accounts, don't concentrate much on dividend on growth stocks. Concentrate on dividend stocks so that dividends go to Jabo Junior. Jabo Junior gives interest. Withdraw the interest and not the principal. Reinvest again to dividend. Get more. Withdraw interest. If you have received additional investment in your junior account, withdraw the interest alone by dividend. So you're using you're using dividend to get interest, then use the interest to get another dividend. And with that, let me come to Q&A. I hope I didn't keep you for a very long time. Let's quickly go through this. Hopefully they are not a lot. To move like a bullet is following you. Yeah, that's how you take investment. Let me tell you, when you see red flags on a stock, think of a bullet. Bullet have on it, is it a fraction of not a second, not even millisecond to hit you. Now you can imagine a move like the bullet is following you, because the losses you make. What's your take on umeme? This one, I think, in the interest of time, I would ask you check our research reports. Kindly share with us about compounding shares, example of high interest. Actually, here it's not interest. Compounding effect is where you are using your dividend to add more shares. It's only that I used compounding word, which you find it a lot in NSE. It's not interest. Interest in stock market is only on funds and also fixed income. Here is you're using dividend to grow your stocks. It's the same way you can compute compound interest. How do you do it? That's where that word is borrowed from. When TransCentury and East Africa cables were withdrawn from NSE, what impact does that have to investor? You can't sell those shares, but doesn't have effect on the general market. It only affects the people who already have those shares, and you have to wait until now CMA gives guideline. You can never lose money. That's one thing I can guarantee you. You can never lose money. When you sell the bonus shares, do you get it back as invested shares to our existing shares? You don't sell bonus shares. You get bonus shares. What happens? The shares you have in CDSC are added with the bonus shares. Let's say you had 1,000 and you have a bonus of 100. So you in total you'll have 1,100. It's you to decide, do I want to sell these extra shares or hold them? But remember, if the counter is still giving you dividend or price is going up, why sell? And these extra shares are profit to you. They are added, so you get more shares at no cost. How long can a court case last? This one I'm not able to comment, because when if politics come in, trust me, it will be forever. And we hope that doesn't happen. We don't have any politician involved in this case, because then it will spill out of the court and it comes to public. That's the end of that file. It will be put aside, because now it's now the public to judge, give their verdict, but the court have to pronounce itself irrespective of what public says. Public may even force some of these companies to close. That's the downside of politics. That's why I said, when you hear politics as an investor, take your time and think about it. What is happening with Kapchora and William Santi? Should one be cautious since profits? Don't be worried. They give good dividends. You be worried about dividends. If profits goes down and they stop giving dividends, that's when you need to be worried. But if they are giving dividend, don't be worried, because even this, your share price will never go down. Remember, you only lose when you sell. You have not sold. These dividends, continue noting them down. When you are selling, even if you sell at a loss, compare with the dividend you received. You might find you made a lot of profit. Don't sell a dividend paying stock. Profits, they may happen, maybe they have small issues. Maybe government policies, international markets are affecting them, if they are, because I believe this could be dealing with even tea exports. They could have a hand there. It could be some of the issues with the price of tea outside, but these are temporary unless they stop giving dividend. You mean one share can buy less than one can buy? Yes, you can buy less than one share, even one single share. Not even in NSE, even in international markets, you can buy one share. Now in September, from international markets, you can buy a fraction. That's the beauty of international market, a fraction 0.5 of a share of a SIGO. In NSE, 1 to 99 shares you can buy on odd lots, ODD. At a normal, you can buy in multiples of 100. Let's meet next week. You see it practically happening. Huh? How many days at most do settlement of trades? It's 3 plus 3 that is set. Huh? Settlement is T plus 3 on local market. International market, I think it is same day. It's 1 day. Yeah, there is a question, Jesse, I think. Thank you for answering that question. Settlement day is T plus 3. So they settle, if you buy today, you count 3 working days. 5 p.m. that's when settlement happens. Movement of actual cash in the bank, shares released by CDSC. 4th day you can sell. Broker can pay you on 4th day. But AIB can pay you earlier through a repayment with a small charge. What about companies that get green audit reports only to explode later that the books were actually not clean? That's why you need to check other reports out there, what they are saying. Even employees, actually information from employees of that company is very important. And they are the ones who leak this information to brokers. So if you see something a broker have posted, verify it with other sources. If it is consistent with many sources, that could be a red flag. But again, if they cook books and it is actually noticed in the industry, CMA will penalize them. When Gagi's Capital went into liquidation, I may not know when they went into liquidation. I'm not sure whether this happened. I'm not sure because they are still in operation as long as I know, unless something else have happened, Jerry. But once a broker goes down as an investor, the only thing you need to be worried is the cash you had with them. Cash, not shares. Cash means if you go to statement, that amount they had with you. Shares never be worried. Actually, you know the way, let me give you an analogy. You go to a hotel, you have ordered maybe a pizza and you're there waiting 10 minutes, 20 minutes, and they come and tell you can even wait for 5 hours. You know the way you walk out bouncing and go to the next hotel and you sit down, it comes, they're actually fighting for you. It's the same thing that can happen if a broker goes down. The only thing you need is to go to them, fill in a transfer form, take it to another broker. Shares in CDSC moves to the next broker. Price doesn't move. Remember, they are valued with the price at their market. Nothing happens to your shares. But cash, it is with the broker in their bank. That's why in AIB, we always advise you buy even those 1 share to make sure no balance is left in your account. So that in the case of anything, you only need to come to AIB, fill the form, sign, go to the other broker. They will actually welcome you with a clean heart. Shares move and you continue trading as if nothing happened. For liquidation, I may not be able to comment on this. Just check on CMA website or business data whether there was any commentary. But as far as I know, they are still in operation. How does one know which company allows one to buy less than every share, including the most expensive? The most expensive is Absa Gold. It is over 1,000. You can buy 1 unit of it times 1,000. You only need to put 1,000 shillings. Safaricom, you can buy 1 share. That Captura, which is expensive, William T, you can buy 1 share times the price. With 200 shillings, you can own 1 share of Captura. And that's how you can build your portfolio. Buying 1 share of Captura with 200. With time, you won't even know you had 1,000,000 shares. What's your start on Uchumi? This one I may not be able to advise you now, maybe from our research, but check our reports. If it's not there, just drop email to us. They will do that commentary. Sometimes you try selling and it takes long for transaction to be executed. Just join us, Aileen, next week. I will explain why. And there is also that blog post I posted on that WhatsApp channel. It explains why. Limit orders. You must match bids. That is, you are selling at the highest bid price to get execution. Otherwise, any other price on ask, you have to wait for those people to be filled. And I explained in that blog, it's first in, first out. Those people who you are seeing the order there, they have to sell first. And prices must come up for you to sell, which rarely happens. So if you put a limit order, be sure it will not execute at any other price apart from the bid top. If you are buying the same thing, if you don't put the price on the seller side, you'll have to wait for prices to come down, which may take time. And that's why GTD comes in. Good till date, you put some number of days so that your order keeps on being refreshed at the same price. However, if you put a sale order for market, it will hit, you are saying go and buy me whatever is available there. It will clear everything as long as it fills your quantity. However, if there is no available shares to fill in your order or to serve your order, market orders expire immediately because it doesn't have a price to be queued. There is another order you can place on portal called market to limit. What you are saying, go to the market, execute for me the available top price. If you're not able to fill, don't cancel my order or expire my balance, convert it to the price you have executed. It will now be waiting for the next trade, counter trade at that price. How can a trader fast track this? Because some brokers are slow in execution. For us, it is there on digital platform. You don't need to call anyone. If you put a limit order, go to the order tab. It has modify button. Click modify. Either match the price that is there or convert it to market or cancel. We have put everything on your side. As the IB, these trainings, they are to empower you to trade on your own. And you become a smart investor. Remember, you're going to a digital era. For us, we are already fully digital. On target price, yesterday, I was looking at Safaricom shares and it indicated 22 to 27. What does that mean? Hope you are referring to our report. If it is our report, the target price, they usually tell you, if you buy it at 18, your target price is 25. So when it reaches 25, it is you to decide to exit. But if you are talking about the limit when you're putting the order, there is that where you put price and it gives you a range from 22 to 27.50. That is the price you can put. The lowest you can put is 22 and the highest you can put is 27.50. 10% rule. You are not allowed to go outside that. So Jerry, let's meet next Wednesday. I'll go into details. I bought Safaricom and Absa at that. They are selling today at 26 and 90. I'm glad to learn that I can sell and make use of the gains. Thanks. Okay, welcome. But don't withdraw money. First of all, Safaricom is not a sell. Dividend. They usually have 3 dividends in a year. So don't sell. Absa, I'm not sure whether they have declared any dividend now. If they don't declare dividend, then that price difference, remember you need to factor cost. So if you have many shares, then you're making good profit. If they are just small shares, don't sell. Let's wait. WhatsApp group, you can get it on our website under research. Clearly explain difference between dividend stock and growth stock in simple terms. Dividend stocks, they are giving you dividend frequently. Growth stocks, they are improving in price. So you are buying low, the price keeps on appreciating. Like if we go to example here up, Safaricom is a dividend stock, or they give dividends. They announce dividend. Absa, if they don't give dividend, remember there is that price movement. It's a growth stock. And growth stocks, in simple terms, the reason why these companies give dividends, they invest that profit, but price keeps on moving. So I hope now it is clear. Growth stocks, they don't issue dividend, but the profits, they invest for growth. That's why they are called growth stocks. Hopefully now I've explained. If it's not clear, next week I can explain. How can one change where dividends are paid? Just contact us. There's a form you need to fill. Send email to our email. Just go to our website, you check our email. Send to any email you see there. on our website, AIB Access Africa. We'll help you because there is a form you need to fill in. You don't need to go to registrar to change your dividend mode. You need to go through a broker. You fill in CDSC one form, we update on CDSC, nothing else you need to do after that. It is automatic. Spreadsheet I will share on the WhatsApp channel, but I will also communicate on the other groups and also social media that it's there. It's very important you have these documents. I will also explain that on the blog and also do a video for it. Presentation, it is there. Just go to our website at the AIB DigiTrader. You go to previous training link, click on it, it will take you to the blog. If you're already on that channel, I've already posted them. If you go to that blog, all presentations, both international stocks and NSE from start. Now we are on NSE day 3, NSE day 2 and NSE day 1 are already there. Sample I would do that I will share. Where do one appoint beneficiaries since AIB? It's not on the app. You fill in manual forms and make sure they are attached. You can set that over. You can download our account opening form at the downloads, individual account opening form. Fill in the details of beneficiary. Then you can send to us. And I think, let me just scroll up the presentation so that you get my email and my WhatsApp number. I don't need to put it on the chat. It is also on the presentations. It is there. If you need to reach to me, even for beneficiary, you can send email to that email. I'll connect you to our customer care team, and our customer care managers now they can update that. It is manual. It's a form you need to fill in. Spreadsheet will be shared. Does the IB have a provision where one can request dividend to be reinvested or be instead of paying out? It's not us who pay, it is the registrar. That's why we are not able to give you that reinvestment option. If dividend were to come to broker, we would credit it in your account, then you reinvest. By law, it is the registrar who receives your dividend. They pay to you directly. Do you have to visit physically to add beneficiary? No, you can download and send via email. And make sure you attach all the documents. Because here you are doing account update. Can I open trading account with the IB? Though I have another, yes, you can have even 20 brokers. Because CDSC account is one. It is opened with your ID at CDSC as one. But the shares that you buy with the IB, you can't see them in the other broker. So you can have multiple brokers. It is your decision. Maybe one broker is giving you this service, the other one. In the IB DigiTrader, just go to open your trading account. There is somewhere it asks you whether you have an account with another CDA. Click yes, put that CDSC number there. It is the same CDSC number we'll open for you. We don't open a different one. Then when you go to, that's why I talked about beneficiary knowing CDSC. When they go to CDSC with your ID, or you go to CDSC with your ID, you will see all the brokers you have and the shares you have. Let's say you opened an account and you can't remember the broker, just go to CDSC with the ID. You are sorted. You only now need to go to that broker. I have had some scenarios where some big investors manipulate price. How do we avoid such or identify them? This is prohibited by law and also by CMA. You have seen them being penalized. So you as the investor, you don't need to be worried. But unfortunately, it happens. Especially when you see somebody buying block trades. CMA they are always on their case. You as an investor, you may never know because some of these things, if they are sorted before they fight their way into court, you never know them. Because CMA always penalize them. You make a mistake, CMA will penalize you. If, however, you decide to go to the court, unfortunately, even if how big you are, CMA, their interest is investor. It will break out there. And remember, when it is in media and in public, your business reputation and your name is at stake. That's why you don't find some of these things. But you do price manipulation, but remember, you can't do it because these days it is systems. The other way maybe you can manipulate price, let me try to think of a way. Because unless you do like what happened with KPLC, and I don't want to assume that's what happened yesterday, where somebody comes, all orders are put in for sale, they block you from putting your own prices as buyers. You are subjected to their price. That can forward price manipulation, but remember, it is not price manipulation. It is a system that did that. Maybe somebody came and put a market order to clear everything on buy side, and they had put a let's say a market order, it clears, then somebody makes by mistake, there is no other orders coming in to buy, then the other seller puts the lowest price for a buyer. That will block everything. But that is not as per market manipulation. These days you can't do it. I don't know other way you can do. I bought shares with Kenyan and Kenya Power and got profit. And again, bought the shares. My shares are not reflecting in my portfolio, and still my equity and bonds segment still pending. If you have bought shares and they are not reflecting in your portfolio, you did intraday trading. You wait for T+3, then don't do any other transaction in between for those counters. In CDSC, as I said in the previous video, you can check it in the WhatsApp channel, and also our social media have already communicated where it is. I said, if you do intraday transactions, any trade you do, it settles at CDSC separately because you're selling to a different individual. CDSC don't know you are doing intraday. For them, they know individual transactions. So what they do, when you sell, they take the shares that you have in CDSC, that's what they remove. When you buy, they put new shares which are in non-balance free mode. So when they do the net of it is zero. So when they are giving us the file, it looks like it is a zero. But ideally, you have some shares. But once it is settled, remember they remove this buy and the sell that is pending. Your shares go back to the right figure. You don't need to worry because within that period, there is nothing you can do. You can't sell them. Remember T+3, even if it is intraday, you're only doing trades for that day, they settle on that day. They will reflect automatically unless you bought and sold what you bought, because now the net effect is zero. However, for bonds, I may not know what you're talking about. Maybe it is posting of transaction in your statement, because that's what I get. Equity and bond segment is your statement. We have had issues with the system, and I think I apologized in the morning. And it is not our system; it's from other quarters, other parties, because we have CDSC and NSE we are connected to them. So if CDSC don't give portfolio variation or trade file, you may not be able to upload on your statement. So you find whenever there is an issue in CDSC, our system, because it has a risk system, remember you are accessing direct market, we need a risk system. If it is notified of that disconnection, it will not post because it doesn't know whether you are bought or sold until CDSC gives that feedback. If it takes time, we will not post until 3 p.m. but it should not go past 4 p.m. because that's when we upload all the files. So the transactions will post on that day. I opened an account with the AIB last week, but no one. What could be the reason? We had an issue again with IPRS, but that has since been resolved. Drop an email or WhatsApp message on my number. It's there on the screen. I will help you get sorted. Kindly let us know the dates for next webinar. Friday, international stocks. Wednesday, next week. Every Wednesday and Friday, we usually have training. And I post on all our social media. What happens to TLC shares now? If it is that issue in the court, just wait for CMA direction. They will update you. But you have not lost your shares. It doesn't affect anything, unless you wanted to sell in between. That's the only issue you have. If you did it intend to sell, just give CMA time. If the court case takes forever, CMA will take its decision. So that's the beauty of CMA. They are independent. It's a government entity, different from brokers, because brokers we have our own entity called CASIB. Different from NSE. NSE, they are separate. Different from CDSC. They make their own independent decision on capital markets. They regulate capital markets. Anything, when you are investing in any scheme, always check whether it has a regulator, either CMA or if it is CBK or insurances or whichever. Make sure there is a regulator. Any investment you are putting where there is no regulations, you are not subjected to any protection. No law protects you, no entity protects you. That's why you find people losing money. NSE, you can never lose money. CMA, it will be there in black. Is it black and white, or these days TVs are colored? Breaking news in red, then bold white. 12th century shares, either suspension lifted or CMA have said this. That is on business news. That's why I said follow business news. You see what happens. About intraday trading, if you bought shares and didn't sell the same day, is the platform going to cancel the order or execute a sale? No, it won't. All orders have to come from you. But that now, at the end of the day, will not be counted as intraday trade, so you are not entitled to rebate. Remember, intraday is where you buy and sell the same day, so that at the end of the day, we don't charge you on-site commission. So if you don't do the counter trade, it will be treated as normal trade. So you will not be entitled to rebate. What you can do, you can place an intraday trade in the morning to buy. Wait for the day, see the market. If it moves with a significant margin, you can actually sell and gain your profit. However, if there is no movement, just let it go. It's a normal trade after that. Settles normally. So if you are planning to take money through intraday, and it requires a lot of volume, just place it in the morning, execute, then wait. Don't place another trade. Remember, you might be tempted. However, what you can do, you can place an intraday, it executes at a market to get execution. Then you put a limit trade to sell or buy back, but put the highest or the lowest price for a buy. Let it be there. Don't give it good till date. Let it be a day order so that it expires at the end of the day. How can one change where dividends are paid? I think this I said. Send email to us. You can send to me or WhatsApp. There's a form that needs to be sent to you. You fill in. Oh, I didn't know I can buy one share. Yes, one share in any of the market we are offering. ODD is one share to 99. At a normal, it's in multiples of 100. International market, the minimum you can buy is one share of Apple. We are bringing in fractional shares where now, instead of buying that one share because it is expensive, let's say it's $200, you can buy a fraction maybe at $50 or even $10. You have heard about fractional shares. When it comes, actually this Friday, I'll also go into a bit of fractional shares so that I prepare you in advance. Your work is now just to come and execute trade. A buy order was rejected. Reason collateral shortfall. It means, you see, gross consideration when you're submitting the order, it's more than your trading space. You got funds icon, you check your trading space, compare with gross consideration. There could be also be another reason, you have a pending order, which have made your trading space go down. That's why I'm saying go to FUD's option or FUD's screen on portal, check your trading space. That screen have everything that is blocking your money. So you check trading space. Remember, our market is preferred. You need to have money in advance to buy shares. Why is KPLC shares declining? There could be other issues. Maybe panic selling. Panic selling is the worst thing that can happen in the market. Why? Maybe there are news that came in. And as I said, brokers, they play a very big role in some of these price movement. They'll give wrong information. KPLC management is about to happen. Then we all panic without checking authenticity of that information. We come and pump sell orders. Remember, when people are buying, they realize there is panic selling. They withhold their orders. You'll be forced to sell at a lower price. Price moves down. It's the same thing. When a good announcement comes in, sellers, they might decide, let's not sell. Let's withhold our shares. That's pushing prices up. So those could be the reasons, but also check our recommendations. They may have said why. At this point, I'm not able to do that quick check. Do you offer advice on which companies one can buy, especially if I want to venture into long term? Yes, go to our website, stock recommendation. Also, we have daily whispers, which is being posted on our WhatsApp group and Telegram channels. Telegram groups, not channel. These are groups. That's where we have daily whispers. They tell you, even in international markets, they're also telling you which to buy, which to sell. We talked about stock index and other factors. That's what they actually even tell you. You see all the terms we have gone through here. You will see them in that. That's why this presentation, if you go through it and you compare, you realize it's not just, they don't look at a stock and tell you buy. They have done a lot of analysis. Fundamentals. Does the IB upshow market information even after market closes? One can put orders after. You can put orders, but remember we are connected to NSE real time. So when NSE switches off their system, they clear all the prices for that day. So basically, even DigiTrader clears that. But when you're placing order, it will tell you closing price. If, however, you want your order to execute immediately, you can place as a market order, then in the market very early in the morning to execute. However, if you have any other price, maybe you have seen it on price list, or when you're placing the system, will give you the closing price. But the downside of that, if market moves against you, then you'll be paying more cost or incur high cost. Is there a report that shows when company declare dividends? Yes, stock recommendations, also price lists. And the corporate actions. Join next week, I'll take you through everything. Again, in that WhatsApp channel and not WhatsApp group, also Telegram channel, not Telegram group, I'll be sharing frequently because I'm the one managing that because of training. So every time, because I need, so we said dividend, for dividend, we are doing compounding effect and we are also doing recycling dividend. I will need to be giving you now that so that you know this counter is paying this dividend on this day. If I buy this counter on this day, this dividend, I can buy the next dividend and it is there. You don't need, so that you don't need to do much of analysis on your side. My social media handles, is it mine or AIB? For AIB, they're there on our website. Is it for me personally? If it's for me, let me know. Maybe there could be something else. If it is AIB, everywhere you type AIB Access, even on TikTok, we are there. It's that name, AIB Access. But go on our website, it's there. Also, you can ask on either of groups we will share. Also, on my WhatsApp or email, I'll be happy to share with you. But you can just search AIB Access Africa. Must you open CDS account? Must you open CDS account? Must visit office? No. Then Derek, just download our app, AIB DigiTrader on Play Store and App Store. The first screen, click skip. You see another one with open new trading account link at the bottom. Click on that, open new trading account. Fill in your details, make sure they are correct, make sure the names are aligned. If you have IDs and passport photos, you can attach. And I use that word, you can. It's not a must, you see it is optional. Submit. Give it a few days. If IPRS is working, you get your CDSC same day. If CDSC is also working, you get the same day. You don't need to. Our digital platforms allow you to invest from wherever you are. You don't need to walk to our office. Unless you want to see our office, and you're invited in a day. Come, we always open 8 to 5. That is, if you want to see our office. You're not coming to solve any issue, because any issue you can solve on DigiTrader app. It has a way you can contact us. Just go to get in that you can send emails directly from the app without coming. You can call directly from the app. Click the number, it dials, then you talk to us. We have automated all our processes, including with withdrawals, unless you are requesting EFT, because EFT, we are not sure whether you requested to be paid via bank. When we see EFT, we always know that maybe there is somebody who wanted M-Pesa, they made a mistake. You get a call to confirm. But for the rest, RTGS, if bank details are there, M-Pesa, it will be released. How do you share recordings and slides? Maureen, let me share that WhatsApp channel. Let me just share WhatsApp channel. It's called My Wealth Guide, KE. Because there I will be helping you. So you have seen we have covered so many things even outside the NSE. WhatsApp groups and Telegram groups, those are for general IB research reports. This channel is now to train basics, so that when you're reading that report, you're able to interpret everything on your own without calling. Is one eligible to dividend when you buy or he sells on book closure? Never do that. Never sell on book closure, but you can buy. If you buy on book closure, you are eligible. Because what CDSC does, they take the total number of shares you have that day at 5 p.m. They said to register as a register. That's why they are called registrars. They get a register with the people who have shares on the book closure date, 5 p.m. That's why buying on book closure, you are entitled. What happens when you sell on book closure? You are removing yourself as a shareholder. Somebody else is taking your portion. So on book closure, never sell. Sell the following day. It's called ex-dividend date. But prices mostly start moving down. No? But if it is a counter giving you dividend, unless the other comparing reasons, please don't sell. And I use please, kindly don't sell. You are selling a dividend you receive next year. So use now that dividend you receive, buy another dividend. You create that cycle so that after some time, you actually don't need to buy shares. You even be sitting and waiting for dividends to come. Channel, I've already shared WhatsApp channel. Let me see Q&A if there was any question. Don't want to leave. As a beginner who wants to venture into long term, these recommendations are on our daily whispers. Just check our research. Just go to our website, AIB Access Africa. Then you click on research to open the research page. Scroll down. You'll see even the links to the channel and links to the group. Join the group. That's why, because these are exclusive reports. And they are shared very early in the morning. About intraday view, I think these are already answered on the other side of chat. What time is it? Oh, it's already 3:40. But I hope you have learned something. Let me see on the chat if you have learned something. Maybe it was just something small. So the question is, so you will be eligible to receive dividend selling the next day? Yes, because let me explain it again. CDSC on book closure 5 p.m. they take the total number of shares you have, irrespective of when you bought. Even that day book closure, you may have those shares even transferred from your parents to you or as a gift from a friend to you. As long as it is done on time before 3 p.m. book closure, because now 3 p.m. to 5 they do reconciliation. Now the total number of shares you have at 5 p.m. you just log into DigiTrader quickly, check the number of shares you have. That's what you multiply with the dividend. That's what you receive. So the book closure is today. The trader after 5 p.m. The total number of shares you have in your account multiplied by dividend. If you sell the following day, remember, register was done the previous day, you are still a shareholder with entitled to dividend. And the person buying the following day is not entitled because they didn't buy when the register was closing. Let me give you an analogy. Tunafanya elections. You're doing elections. Elections count up to when? When polling stations close. What if you vote after that? Your vote is not eligible. But the vote including the closing day is eligible. I hope that analogy now clears everything. Thank you for feedback. Always welcome for future trainings. Wednesday, Friday. We want you to have as much information as you can to trade on your own, so that you are an empowered investor. You never know, in 5 years the market may be digital. If you don't have this information, you may not be able to trade. And the question is, why don't you trade on international markets? It's because we don't have those information. It's the same thing with NSE. If we don't give you this information, we actually telling you, come, we trade for you. But then, ask yourself one question. Banks used to be in that arena where you needed to walk to a bank to withdraw money. You needed to go to an ATM and withdraw. What happened with M-Pesa? It came and told them, stop this. They can even do anything from their house without working. And banks realized, oh, this is wrong. Let's even put agencies where they are. They put agencies. But then again, you're not going out of the house, you can pay. They decided that even us allow payment straight. They started fighting, and then they realized we might lose. Let's even allow cross posting of transactions from bank to M-Pesa. It's the same thing with NSE. I'm head of product and innovations at AIB. I can tell you where we are heading. You might not even need to walk out of your office. If we don't give you this information, somebody else will come and do. What happens if one tries to open an account but it's not with all documents? Don't worry about documents. If you look at them, it says optional. You just submit. Make sure the details that you have captured are correct. That is what is most important. But if you can attach, that's nice. It helps a lot. But for now, until we implement that requirement, you just submit what you have typed in. That's what is required. It's amazing though, sijaelewa kila kitu. You know, this presentation was very long. That's why I'll be repeating every Wednesday. And I'm sharing this recording so that if there is something you have not understood, my number, my email is there. Reach out on WhatsApp any time of the day. I will explain to you. Just WhatsApp me. If you'd want call, maybe we talk, just confirm with WhatsApp whether I'm able to assist directly. I would. For those whom we have talked on WhatsApp, they know. Even on weekends. And that's WhatsApp channel and Telegram channel, they are active 24 hours. Whenever I wake up and I feel, let me share something, I will share, so that when you wake up, you have something to go to the market. Any other question? And also invite your friends to join that channel. Even if they are not investing, they may learn something, then you help them start investing. You know, it's not a must you start investing today. But once you understand what you're getting into, what profit you're getting into, tomorrow, you just find yourself opening account and start trading. And when there's opening account, share your referral link so that you make money out of it. Commissions that we charge, we will share with you for 1 year. So in the interest of time, we have surpassed our time, and I hope I didn't keep you wrong. Receive a lot of appreciation from AIB Access. And for those who are not yet clients, I've shared that WhatsApp channel again. Just click on it. It's my wealth guide. I want to thank you for finding time to come today to just run and also implement these. And you're always welcome. You do this for free. And all information that are posted on groups and channels, free of charge. We are not charging you. Run this for free and invest. Let's meet in the next one, and thank you so much. And as you drop, you can just say hi, so that I know I wasn't just alone. Thank you so much, and welcome. Let's talk on WhatsApp for those who may have questions. Thank you, and let's meet in the next one.